Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Wednesday, September 12th, 2007. The market's closed, and we had kind of a mixed picture here today. The advancers were only 1,300 versus decliners of 1992, and I think internally that painted a worse picture than what we actually saw unfold. The spiders were up 29 cents. That's about 0.2%. And you can see they came up to this declining 50-day moving average. That's the dotted one. And were rejected from that level intraday. So that's important to note that the 50-day moving average is declining and once again seems to be acting as resistance here after it looked like maybe it was going to break out last week. We had that failed move past the neckline of the inverted head and shoulders pattern, but it does hold above that. So still seeing a lot of mixed picture on the different time frames for the market. And again, the weekly time frame is the one that has me most concerned, because if this plays out, it would suggest that we get a move down towards this level here, maybe down towards 138 or so. So keep an eye on that and continue to just be suspicious overall until we can get better clarity as far as the buyers actually having regained control. Now the 10-minute time frame, you can see that we did close the gap. That had a lot of people interested in the market, but I don't really think that closing the gap really means much of anything. You can see that that level did act as a little bit of resistance intraday. It came down later in the day, but we didn't get a real breakdown. It looks like maybe we could see some consolidation in here, but overall on the 10-minute picture with a flat 5-day moving average and we've seen this market rally 4 points over the last 3 days, I think it pays to just be cautious in here. So really, it's tough to say where this market's headed right now, but overall we've got to cast an eye of suspicion on it with the longer-term weekly pattern looking as ominous as it does right now. The semiconductors were the weak spot in the market today. These guys finished with a loss of 69 cents. That's 1.8%. So keep an eye on this pretty careful the next couple days, because they do tend to lead the Nasdaq overall sometimes. But it did come down to the neckline of that inverted head and shoulders pattern, so maybe it's going to find support in here. Tough to say. I was saying earlier in the week that a break below the lows from Monday might signal a test back down towards the 36 level, 36 and a quarter, maybe even down towards these lows. So we do have this pattern of lower highs in here and breaking below to another lower low at 37.40. Getting below that could open the floodgates and we could see a more fearful sell-off. So the late day sell-off we saw yesterday was in fact added to today, and you can see that the symmetry of these moves right here at this point from 38.5 down towards about the 37.80. That's 70 cents. And then you take that 70 cents, subtract it from this level here at 38.20, and that gives us a move down towards 37.50. So it's possible we're going to find some support in here. We do have a declining 5-day moving average. That's a reason for concern, as well as this bigger picture. So just more mixed messages on the semiconductors. It's going to potentially take some kind of fundamental catalyst to move us out of here. So always be aware of when those potential catalysts might be released to the market. The one that really still looks the worst is this IWM, the Russell 2000. The Russell 2000, obviously we realize that this is an important level that's been resistance up near 80.20. It's been rejected at that 4 times over the last 4 weeks, and now the market is again below a declining 50-day moving average and below the 10 and 20-day moving averages, stuck below those 2 moving averages for the last 4 days. And we've seen an attempt at recovery in here, but it's come on light volume. That means that what typically the lighter volume means is that relative to the decline, the market declined on big volume. There's a lot of fear in the market. Relative to that, the market has bounced, but has only bounced a little bit and on light volume, showing that the buyers aren't very aggressive in here. The shorts aren't aggressive about covering their short positions, and the buyers aren't in there looking to establish large new positions. Looks like that 78 level continues to be important. That's what I said earlier in the week, is that we really need to see it get above $78 a share before we can think that this market has any chance of potential for retesting the larger resistance level that we've seen develop over the last few weeks, up near $80.20. This, I'm not sure what to make of this yet, but big volume, real big volume here at the end of the day. If we look at a 1 minute time frame, you can see it did come apparently as the market was declining. I don't know what that signals, but be aware that probably breaking below this low here, 77.35. We'll probably get a test of that $77 level, and below $77, like I said yesterday, I think that invalidates this recent strength here. We do have a little bit of resistance up near the 78 level. I think if you throw a lower low into the mix by breaking below this level here of 77.30, then it's going to open the doors for another decline. Look at the direction of the 5-day moving average. That's why you don't want to trust this rally as well. So continue to be very defensive, especially in the mid-cap stocks. We've got this very ominous-looking picture setting up, and I can't emphasize that enough, that there's a lot of danger in this market. The Nasdaq 100 continues to be the strongest group. However, it did show this big tail right here. I think candle people call that a spinning top maybe, and that's supposedly a bearish omen for the market. And basically what it is, you can see it a lot more clearly on, for instance, a 1 minute time frame. The market started out strong, ran up pretty good today, came down, tested that VWAP, made another rally off that, but it made a lower high off that level. And as that VWAP started showing a decline for the day, that's when it became apparent that the sellers were in control, breaking below this little level of support. That's where these lower highs and lower lows came. So it's showing that the average price for the Qs today was up about 49.09, meaning that at 48.94, most people who participated in the Qs are losing money. And again, that gets represented here with this big tail here. So now we do remain above the 50-day moving average. That's somewhat bullish. But a lot of mixed pictures here across the different markets and time frames. Overall, I think that the basic way to look at this market is more neutral than anything right now, until we have some kind of catalyst that pushes us out of these ranges. But looking at the IWM, the semiconductors, it seems as though we have to be very cautious in this environment still.